No, that means you're going to start again, Francis.
This is the real source. We missed it. We missed it. Okay. I am gonna start again. Don't worry. I am gonna start again.
We can choose another pair. We'll finish this one. Another pair. Okay.
let's start again. Don't worry. Let's start again because this is becoming interesting. So I spoke about this kind of thing. Yes.
Francis.
Yeah.
Please. I like to see. I'm copying the levels on your Fibonacci because my Fibonacci doesn't give me all the same levels. If you don't mind putting it back, please just copy those levels, the numbers, so I can update
all right.
mine.
Can I put that on the chat for you? On the chat for you when we're done with this, please.
Yeah.
No, it's all right. Thank you. That's all right for everybody else. At least I can. No problem.
Yeah, everybody else can see the settings.
Yeah, no problem.
So we spoke about this last red candlestick here, and we said it's an institutional candlestick, right? Why then is that when price got here, we did not get a buy, but then price decided to come down?
Because you say that institutional candle has already been violated.
Yes, and the reason why it has been violated. Sorry.
Because price closed below the body of that institutional candlestick, so that means it's been violated.
Yeah, it closed below.
Yes, it closed below the body of that institutional candlestick. That violates it, and it's no more valid. And immediately it becomes invalid institutional candlestick. We then come to call it a mitigation candlestick. Mitigation CS. It becomes a mitigation candlestick. So what do we use a mitigation candlestick for? We're looking at price to retest this same candlestick, and we can look for a sell opportunity.
Okay. 3 mitigation is the retest mitigation.
Right? We wait for a retest of this candlestick, and then we can look for a sell opportunity after we have been taken out of our trade in the buy side. Does that make sense?
Yes.
Perfect. And now we can come back to this area. What do we see? Once again, what do we see? What picture are we seeing? Harmonically, what picture are we seeing?
That's a bat.
Perfectly a bat. And how would I know it's a bat? I need this retracement to be a minimum of 50%. So if I take my fib and I drag it from the swing low to the swing high, I need a minimum 50% right here to confirm that I have a bat pattern, right? And if that is the case, then I can happily place my harmonic patterns on there. X to A, A to B, B to C, and C to D. Where is our D lining up at?
Institutional candle gap.
Entry.
Institutional candle gap and what else again there? And harmonics.
Perfect. So we have we have what we call commonality at our entry. We have what we call commonality at our entry. We have a gap, we have an institutional candlestick, and we have a harmonic pattern completion. Why would I not take this trade?
And the stop loss is going just
because you are rich, you don't want the money.
that's a wicked answer.
Because he's asking, why would I not take the trade?
yeah, I'm just asking because
no, there's no, to be honest, there's no reason for you not taking the trade.
Absolutely.
That is what that's all I call confluence.
Confluence, right?
Yeah.
If I meet in this area, why would I say I don't want this trade? And one more thing I want to show you. If I should take the fib from here, from this B leg to the A leg, to the C leg, sorry. One more thing. Look at the extension level that we have in 1.618 lining up in the gap.
Oh, yeah. You do essentials as well.
Yes, I do.
What I would normally have done would have been A to B extended from C.
A to B extended from C.
Yeah.
All right. I would do B to C.
Yeah,
okay,
no, I think you'll be using a fib extension, aren't you?
Yes.
Yeah. Okay. So I see the difference between the way I look at it. Okay.
You see how it's lining up perfectly right there?
Yeah, it does, yeah.
That makes a whole lot of sense.
Now let's move on. Let's move on. Let's take this off and see what we can do with this chart. So now, do we have a trade or we don't?
Okay, we got one, yeah.
We do, but then it's not ready yet. And because it's not ready, we're going to scale down this area. Do we have a gap here?
Yeah.
We saw this gap on the 4-hour with an institutional candlestick, right? But then look where the gap is. So in the 50% of this gap is where we want to take our trade. Because it lines up with the institutional candlestick on the 4-hour. I'm going to make it blue. And I'm going to make it bigger. That's where we want to take a sell opportunity. We will only take this sell. We will only take this sell opportunity. We will only take this sell opportunity if price comes up here before the down here.
Yep.
Who understands the reason why I said we will only take this sell opportunity if price come up here before down here?
Because the downside has a higher probability in terms of where we're coming from. It has a daily zone below it, and it has a 4-hour zone plus the 1 hour, and as well as the harmonics. So there's so many things down there that's going to push the price more likely up. Plus, initially, you said we're going to create a high first before we create a low when we look at the daily.
Yes, so let's go back to the daily. The top-down analysis we did on the daily. Guys, look. When we got here, I told you we have a high, a low. So we are going to create what? A low high before a low, right?
Yeah.
So we are creating a lower high before the low, which means the lower high we are creating on the daily. I'm looking around this area for that lower high to be created. On the 1 hour, there we come to have a harmonic pattern lining up, giving us the buy opportunity to the upside. So I will only prioritize this buy above this sell because why? Our main target is creating a lower high. Is it making sense?
Yeah.
So if I don't come here first before here, I am not going to take this sell. Instead, this area could become a perfect mitigation area.
Okay.
It can become easily one of this mitigation area. It means that we can come back to that. We can break it. Sorry. It means we can break this area, retest this candlestick, and then continue the direction up. So assuming I'm not a harmonic trader and then I miss this trade, or I don't understand institutional candlestick and I miss this trade and I have a knowledge of mitigation, I can just wait for price to break this area, retest these candlesticks right here on the 4-hour, which is an institutional candlestick, and then I can take a buy to the upside. Does that make sense?
Yes.
So this is the picture that we have on the 1-hour time frame. Now we're going to squeeze in to the 30 minutes and see if we can take a trade. So the 30 minutes is already posing an opportunity for us to sell. And I say this was an institutional candlestick on the 30. Can I say that?
Yep.
So it's just inside the gap.
Look at the way we came in just the week and already we're looking to sell down. Is it making sense?
Yes.
We have already played off this institutional candlestick. We have this gap right here, which we're not going to look at until price gets up here. Price decide to reverse up here, come up here, then we are happy to take the sell down again. If not, we had a sell opportunity that presented itself just not long ago, let's say about 30 minutes ago, presented itself and gave us a sell. Let's see on the smaller time frame if we can knock it. Let's do this first. Can we reduce the gap that we have here, guys? Can we reduce it?
On the lower time frame, yes.
Perfect. So we can reduce this gap right here. And we can reduce this gap right here. Can we see there is a gap even further down here?
Yes.
So in that zone is where we want to place our buy order. Why? Because it's within the institutional candlestick. And if I should use Fibonacci right here, it's going to line up at the 50%. This gap is going to line up at the 50% of this institutional candlestick. Does that make sense?
Yes.
This is what I mean by if I should line up Fibonacci, I want us to see the picture. The 50% is going to be from the wick right here to the body. And look how the 50% is lining up in that zone. We see that. So in that zone, oh, sorry, what have I done? In that zone, we have our 50% of the 1 hour institutional candlestick. And that makes it,
body to,
sorry?
is it fit body to body or week to week?
Is the wick on the upside to the body on the downside.
Okay, that's how you do the fit for the 50%.
Yes.
Okay.
And the beauty of what I've just done is if we go on a smaller time frame, we have the potential of seeing an institutional candlestick lining up at that 50% that we have marked on the 30-minute. Does that make sense?
Yeah.
So can I say we are happy to see a potential reversal, a potential trade right here? Can we take a buy from here? We take a buy from there with our stop loss sitting right there. And our TP coming all the way up here. Can I say that? And then having a sell from here with our stop loss right here. And our TP coming down here. And having a buy from here.
Up to the top.
From here. With our stop loss just there. And our TP. With our TP coming all the way into this gap. Can we do that? Potentially, that is our TP1. This is our TP1. We could be coming even all the way here to take this equal highs. Can I say there's an equal high right here? Can I say that? Equal highs.
Yeah.
Yes.
So potentially our TP1, our TP2 is about that high. There's a TP1, TP2, and TP3. TP3 is going to be here in this gap. Let's mark it. Let's go back to black and small. Now, do we have some value right here, right now?
Yes.
100%.
So this is the lineup of trade that we are currently looking at. Potentially, we have 3 trades set up on GJ right now. We can have the buy from here and TP from there and come back from there to finish this harmonic pattern. And then from here, we can go all the way up. Now is a scenario. We're just going to follow what the market gives us. What the market gives us is what we're going to do. We're not going to force the trade. Does that make sense?
Yes.
So on the 15 minutes, we're going to wait for price action. We're going to wait for price action. And what it gives us in this gap, in this area right here, if we close in the gap. If the price action is nice and we snipe it perfectly, we are going to stay in this buy. Right?
Yes.
We are not necessarily going to have this as our TP. When price gets here, we are going to take partial profit and leave the trade to ride. Do you know why?
Because you may breach the institutional candle.
We may breach this institutional candlestick and immediately start the bullish movement. Is it making sense?
Yes.
Hence why if we get this buy, we are going to stay in this buy, pass this area, see what price action we get here. If we get the reversal back to complete the harmonic pattern, fine. If we don't, we have already got in a buy. Right?
Yes.
Mm-hmm.
In the end, it's a win-win.
Yeah.
We got the trade, we are in the setup.
So Francis, because
Yeah.
just a quick one, because when it gets up to the top, what do? You just move your stop loss then?
When it gets up to this top, I'm going to take a partial profit and move my stop loss to a 50% of the trade.
Yeah.
That's what I'm going to do. So if price decide to reverse up here and I see the reversal, by the time it breaks the 50%, I know that it's definitely going to reverse. Hence why I put my stop loss at the 50%.
Okay.
Does that make sense?
Yeah.
Yeah. So it's what happens then, because if he goes up to that top, why don't you just let it ride and take your profits and leave it like that? Because otherwise you're losing out because you're only taking 50% and yet you have the potential of taking 100%.
I have the potential of taking 100%, but then I have the potential of taking 3,000%.
If he continues higher.
Yeah.
Does that make sense, Lenny?
Yeah, it makes sense. Yeah. I know what you mean. Yeah.
So I'm going to prioritize taking a partial profit here and hold on with the potential of getting 200%. Does that make sense?
Yeah.
That is how this works. Potentially, we can get a sell from here. A sell from here. If you're a scalper, with this 15 minutes institutional candlestick, we could be looking for sell from here all the way into here. If you look on your MT4, price would begin to start creating some divergence. And this is where it deceives people, thinking that the downtrend has finished. So they will start looking for a buy, and all of a sudden price gets here and reverses straight here before the main reversal. Does that make sense?
Yeah.
So now, this is the top-down analysis I do. I can scale in all the way to 1 minute, and then I would prefer taking minimum 15-minute time frame because of learning purposes. We are beginners, and I wouldn't want to make it too complicated. So now we have this as our point of interest, our main point of interest. Our second point of interest, looking for a potential trade all the way to there. All the way to there. And look, if we get the trade all the way up there, we could be looking at a harmonic pattern. What pattern would we be looking at? 50%. We'll be looking at a bat. Hence why I am happy that we will even go above this liquidity. So this TP2 is even a lot more feasible. We'll clear the liquidity before the down move. See why I do my analysis, how I do my analysis. This is my lineup for the next 2 or 3 weeks. If all things being equal.
Francis?
Yeah?
Can you put the last Fibonacci you put in again? Let me see where you started from, please. The one you used to create the bigger bat on 4R. Okay. But why is the TP above the zero?
TP is above the zero because we have equal high, even though
liquidity in there.
Yes, even though our entry is supposed to be here, I'm not going to risk taking an entry here. I would rather wait for price to take liquidity before I enter a sell.
Okay. Okay. That makes a lot of sense. Because this whole liquidity area now will become what I'll refer to as basing candle on a weekly or daily chart.
Perfect.
Okay, that makes a lot of sense. So there will be a gap right above that area.
There is.
Take our liquidity and come back.
There is. If you look at the gap right there.
Okay, yeah, that's it. Yeah, I can see it. now.
You remember you marked up AJ, and then you sent it to me.
Yeah.
And you had a gap almost around that same area.
Yeah.
That is exactly the same thing we're looking at.
I didn't trade today. I just marked it up and I left it. I haven't checked it.
Yeah, I didn't trade either.
I just didn't feel it like trading today. I said no, let me just leave it and watch.
Look on your AJ chart. Look around that same area on GJ.
Okay.
So this is the same kind of picture we're looking at here. Look.
Yes.
So it's